साइड। तो गाइस ये चैप्टर नंबर 3 है जिसमें कि इंट्रोडक्शन ऑफ फ्यूचर एंड फॉरवर्ड कॉन्ट्रैक्ट का जो भी है इसमें सेकेंड लेक्चर है गाइस, जो कि पिछले लेक्चर में हम लोगों ने पढ़ा था फॉरवर्ड एंड फ्यूचर के बारे में। तो ये सेकेंड लेक्चर है पार्ट 3 का। तो हम आ जाते हैं पे ऑफ चार्ट से शुरुआत करेंगे गाइस। जो देख सकते हैं पे ऑफ चार्ट। तो पे ऑफ चार्ट फॉर फ्यूचर इन केस द फ्यूचर कॉन्ट्रैक्ट लॉन्ग एज वेल एज शॉर्ट पोजिशन हैज प्रॉफिट और लॉस पोटेंशियल, जिसमें कि देख सकते हैं कि जो भी हम शॉर्ट पोजीशन करते हैं फ्यूचर कॉन्ट्रैक्ट में उसमें अनलिमिटेड प्रॉफिट भी कर सकते हैं, अनलिमिटेड लॉस भी कर सकते हैं। इसका ये पोटेंशियल है। दिस रिजल्ट इनटू द लिनियर लेआउट फॉर द फ्यूचर कॉन्ट्रैक्ट। फ्यूचर पे ऑफ आर एक्सप्लेन डिटेल्स बिलो। पे ऑफ फॉर बायर फ्यूचर लॉन्ग फ्यूचर, जो पे ऑफ है गाइस बायर फ्यूचर के लिए, इसको लॉन्ग फ्यूचर करते हैं भी। तो हम आ जाते हैं लेट्स say a person goes long in a future contract 100 rupees. This means that he has agreed to buy underlying 100 on expiry. Now if on expiry the price of the underlying 150, then this person will buy 100 as per the future contract and will immediately be able to sell underlying in cash market 150, thereby making a profit 50. तो देख सकते हैं गाइस जिसमें कि आप देख सकते हैं कोई आदमी अंडरलाइंग प्राइस एक्सपायरी के दिन 150 रुपया है, तो जिसमें पर्सन 100 रुपया में बाई करता है एज पर द फ्यूचर कॉन्ट्रैक्ट, और वो इमीडिएटली बेच देता है मार्केट में 150 में, तो देयर मेकिंग प्रॉफिट आपको 100 रुपया में होता है। ठीक, सिमिलरली इसी प्रकार इफ द प्राइस ऑफ अंडरलाइंग फॉल 70 रुपया एट एक्सपायरी ही वुड बी बाई 100। जैसे कि कोई एक्सपायरी के दिन 100 रुपया में खरीदा था और 70 रुपया के नीचे आ गया, तो जिसमें देखते हैं फ्यूचर कॉन्ट्रैक्ट एंड सेल देम इन द कैश मार्केट ही विल रिसीव 70 रुपये, ट्रांसलेशन 30 रुपया का लॉस हो जाता है। ठीक, तो इसमें दोनों तरफ है। अगर आप फ्यूचर खरीदते हैं ऊपर चला गया तो प्रॉफिट हो गया, अगर नीचे चला गया तो लॉस हो गया। दिस पोटेंशियल प्रॉफिट लॉस एक्सपायरी व्हेन एक्सप्रेस ग्राफिकली इज नोन एज पे ऑफ चार्ट। तो जो भी पोटेंशियल है प्रॉफिट और लॉस का, जिसको हम ग्राफिकली चार्ट के द्वारा प्रदर्शित करते हैं उसको हम पे ऑफ चार्ट करते हैं। ठीक, the x-axis has the market price underlying at expiry. It increase on right hand sides. We do not draw x-axis and left hand side as a price cannot go below zero. इसमें below zero होने की संभावना नहीं। The y-axis show profit loss and the upward direction we have profit and downward direction we have loss in the chart. तो हम आ जाते हैं नीचे। Below the table payoff chart shown long future. The market expiry देख सकते हैं 50 पर है तो हुआ है, तो लॉन्ग फ्यूचर को सॉरी गाइस डिस्टर्बिंग हो रहा है, थोड़ा सा डॉग आ गया बीच में। तो अब शुरुआत करते हैं थोड़ा सा। लॉन्ग फ्यूचर एट 100, तो देख सकते हैं मार्केट एक्सपायरी 50 पर आ गया तो 50 लॉस होगा, अगर 60 पर आ गया तो आपको 40 का लॉस होगा गाइस। अब आ जाते हैं 70 पर है तो 30 रुपया का लॉस है, 80 पर 20 का, 90 पर 10 का, 100 पर है तो 0 का लॉस। तो 100 से ऊपर आए 10 रुपया प्रॉफिट, 120 20 का प्रॉफिट, 130 30 का प्रॉफिट, 140 40 का प्रॉफिट, 150 50 का प्रॉफिट। ठीक है गाइस, अब आ जाते हैं पे ऑफ चार्ट। देख सकते हैं कि जब ऊपर जा रहे हैं तो ऊपर प्रॉफिट हो रहा है, नीचे हम जा रहे हैं तो नीचे नेगेटिव हो रहा है। तो जिस तरह का उसमें ऊपर बताया गया तो सेम टू सेम है, ज़्यादा इसमें समझने का। अब आ जाते हैं शॉर्ट पे ऑफ, ऊपर लॉन्ग था इधर शॉर्ट था, तो लॉन्ग में हो जाता है गाइस जब हम बाई करते हैं और शॉर्ट में हम सेल करते हैं। एज वन पर्सन गो लॉन्ग सम अदर पर्सन मस्ट गो शॉर्ट अदरवाइज ए डील विल नॉट टेक प्लेस। ठीक, इसमें क्या गया गाइस, अगर कोई किसी ने लॉन्ग किया है तो कोई उसके अपोजिट में शॉर्ट करेगा तभी कोई भी डील होता है। तो इसमें फ्यूचर में है कि दोनों पार्टिसिपेशन होना चाहिए तभी कुछ भी होता है। Profit and loss for the short future position will be exact opposite of the long future position. This shown is the table chart. इसमें है गाइस एक्सपायरी के दिन देख सकते हैं 50 रुपया का प्रॉफिट है, वहीं 60 पर प्रॉफिट का है, वहीं नीचे आता 70 पर 30 का प्रॉफिट है, 80 पर 20 का प्रॉफिट है। जैसे जैसे ऊपर आ रहे हैं निगेटिव हो रहा है और जैसे जैसे नीचे जा रहे हैं प्रॉफिट हो रहा है। लॉन्ग का सीधे शॉर्ट अपोजिट है, इसमें कुछ ज़्यादा तीर मारने का नहीं, जैसे कि आप देख सकते हैं। तो जैसे जैसे हम नीचे जाते हैं प्रॉफिट, जैसे जैसे ऊपर जाते हैं प्रॉफिट बढ़ रहा है RDC से नीचे जाते हैं, प्रॉफिट कम रहा, तो ये थोड़ा सा चार्ट उल्टा हो गया है, जिसके कारण कि इधर से दूसरा आ गया, मतलब ऊपर से नीचे की ओर। ठीक है, तो देख सकते हैं, एज कैन बी सीन ए शॉर्ट फ्यूचर make profit when price fall. If the price falls 60 at expiry, the person who has shorted handed will buy from the market at 60 expiry and the sell handed, then the making profit 14. This is shown at the above chart. Future pricing आ जाते हैं, future pricing में क्या, pricing of a future contract depends on the characteristic of underlying asset. This is no single way to price future contract because the different assets have different demand and supply pattern, different characteristic and cash flow pattern. This make it difficult to design a single methodology for calculation of price of the future contract. Market participants use different model for the pricing future. Here our discussion is limited to only two popular model of the future pricing, cost of carry model and expectation model. Cost of carry model and expectation model. Cost of carry model for the futuring price. Cost of carry model is also known as a non-arbitrage model. This model assumes that in efficient market, arbitrage opportunity cannot exist. In other words, the moment there is an opportunity to make money in the market due to mispricing in the asset price and its replica, arbitrageurs will start trading to profit from this mispricing and thereby eliminating this opportunity. This trading continues until the prices are aligned across the product, market and replicate asset. Let's understand the entire concept with the help of example practically forward and future. In the cost can be created in the following manner. Enter into the forward and future contract. Create a synthetic forward future position by buying data stock in the cash market and carrying to the future date. तो देख सकते हैं, the price of acquiring the asset by the future date should be same both case. Cost of synthetic forward and future contract spot price plus cost carrying asset from the true date of future date. जिसमें देख सकते हैं फ्यूचर कॉन्ट्रैक्ट और स्पॉट प्राइस होता है जो कि कॉस्ट ऑफ कैरी आगे की डेट के लिए करते हैं, वो टोटल मिलाकर आपको फ्यूचर कॉन्ट्रैक्ट कहलाता है. शुड बी इक्विवेलेंट टू द प्रेजेंट प्राइस ऑफ फॉरवर्ड फ्यूचर कॉन्ट्रैक्ट. If the prices are not same, then it will be trigger arbitrage will continue until price in both market are aligned. Cost of creating synthetic future position in the fair price of future contract. Fair price of future contract is nothing but the sum of spot price underlying the asset, cost of carrying asset from the today until delivery, cost of carrying financial asset from today to the future date would entail different costs like transaction cost, custodial charge, financial cost, etc. For the commodity, it would be also include costs like the warehousing cost, insurance cost. भाई थोड़ा सा Let us take example. अब इसको हम example के थ्रू करते हैं. From the bullion market, assume that the spot price of gold 62,130 per 10 gram. ठीक. The cost of financing storage and insurance for the carrying the gold for a period of 3 months, 100 rupees per 10 gram. Now you purchase 10 gram of gold from the market 62,130 and hold for the 3 months. We may now say that the expected value gold after 3 months 62,230 यानी आपको 100 रुपया की बड़ा हो गया पर 10 ग्राम पर. Assume 3 month future contract on gold trading 62,280 10 gram. What should one do? Apparently, one should attempt to exploit the arbitrage opportunity present in the gold market, buying gold in the cash market and sell 3 month gold future simultaneously. We borrow money to take delivery of the gold in cash market today, hold it for 3 months and deliver in the future market on the expiry of our future contract. Amount received on the settling future contract could be used to repay financier of our goal purchase, the net result will be profit 50 without taking any risk. Please note that we have not considered any transaction cost in this example. ठीक because of this mispricing, as a more and more people come to cash market to buying gold and sell future market, a spot gold price will go up and gold future price will come down. This arbitrage opportunity continue until the price between cash and future market align. Therefore, if the price is more than the fair future price, it will be trigger cash and carry arbitrage, which will continue until the price in both market and align. Similarly, if the future price is less than the fair future price, it will trigger reverse cash and carry arbitrage. Market participants will start buying gold in future market, sell gold in cash market. To do this, traders will borrow gold and deliver it to owner the contract in the cash market and earn interest on the cash market sales procedure. After 3 months, they give gold back to the lender on recipient of the same future market. The reverse arbitrage will result in reduction of gold spot price, increase of its future price, until these prices are aligned and there is no future arbitrage left. Cost of transaction, no arbitrage bond. Cost component of future transaction like margin transaction, cost, commission, taxes, credit distribution, distortion, and move the market away from the equilibrium. In fact, these cost component create non-arbitrary bond in the market. If the future price is within this bond around the fair future price, arbitrage will not take place. In the other words, because of friction in the market for arbitrage get triggered, it is important for the future price to fall outside no arbitrage bond in either direction for the arbitrage to make profit from the arbitrage opportunity. Fair price, no arbitrage bond. Practically, every component of carrying cost contribution toward the winding of this no arbitrage bond. Here we should appreciate that the no arbitrage bond further marketer from the equilibrium. In other words, for the market to efficient, different cost operating in the market should be low possible. Lower cost would narrow no arbitrage bond, which in the turn would ensure efficient price alignment across the market. देख सकते हैं भाई extension of cost carrying model to the asset generation return. Let's extend the cost carrying model by adding in the inflow during the holding period of underlying asset. For instance, underlying asset like security, equity bond may have certain inflow like dividend on equity and interest on the debt instrument during the holding period. These inflows are adjusted in the computation of their future price, thus modified formula for fair future price और synthetic future price. Fair future price क्या होता है? Fair future price होता है spot price plus cost of carrying minus inflow होगा. तो ये आपका मेन फॉर्मूला है फेयर फ्यूचर प्राइस का. ठीक, मैथमेटिकल टर्म में देख सकते हैं एफ इजकल टू स्पॉट प्राइस एस प्लस 1 प्लस आर माइनस क्यू पावर टी. फेयर फ्यूचर प्राइस हो गया एफ इजकल टू एस इंटू 1 प्लस आर माइनस क्यू 1 प्लस आर माइनस क्यू को पावर टी. टी इजकल टू टाइम हो गया. Where F is a fair price future contract and S is the spot price of the underlying asset. Q is the expected return during the holding period T in a year. R is the cost of carry. If we use the continuous compounding, we may rewrite the formula F is equal to S e power R minus Q into T. Let us apply the above formula to the index future market to find the fair future price of index. Suppose you buy an index in cash market 17,500 level, purchase of all stock constitution index in the same proportion as they are in the index cost of financing in 12% and return on the index 4% per annum. a spread uniformly across the year. Given the data, fair price of index 3 months down the line should be a spot price into 1 plus cost financing, also forward price into 1 plus cost financing minus holding period return. For power T, T expiry date होगा भाई 1065, 70,500 स्पॉट प्राइस है गाइस, जो 1 प्लस कॉस्ट कैरिंग देख सकते हैं। फाइनेंशियल 12.12 माइनस 0.4 पर पावर 90 डे का, जो कि 365 आपका निकल सकता है 17,835। ये हो गया हमारा फ्यूचर प्राइस। अल्टरनेटिवली वी कुड बी एक्सपोनेंशियल फ्रॉम द कैलकुलेटिंग फ्यूचर वैल्यू spot price into e power r minus q power t, e power r minus q power t. Value in the case would have been 17,500 into e power 0.12 minus 0.04 power 90 by 365, 17,848। If the index future is trading above 17,848, we can buy index stock in the cash market and simultaneously sell index future to lack of gain equivalent to the difference between future price and future price. Note that the post transaction taxes margin are not considered while the calculating fair future price. Note: cost of borrowing of fund and security return expectation on the held asset are the different for the different market participants. Perhaps the different fair value of future contract no arbitrage bond for the different market participants is what makes the market and trading take place on the continuous basis. Assumption for the cost of carrying model. Assumption of the cost of carrying model. This model of future and pricing work under certain assumptions. These important assumptions are stated below. The underlying asset is available in the abundance in the cash market. Demand and supply in the underlying asset are not essential. Seasonal holding and maintaining of the underlying asset is easy and feasible. The underlying asset can be sold short. There are no transaction costs, there are no tax, there are no margin requirement. This is not an exhaustive list of the assumptions of the model, but list of important assumptions. The assumption that the underlying asset is available in the abundance in the cash market means that we can buy or sell many units of the underlying asset as we want. This assumption does not work especially when the underlying asset has a seasonal pattern of demand-supply. This price of seasonal asset, especially commodity, vary drastically in the different demand-supply environment. For example, in case of agriculture commodity, when new supply arrive in the marketplace, price tend to fall, whereas price tend to begin just before an arrival of the new supply. When an underlying asset is not stable, the asset is not easy to hold maintain then one cannot carry asset into the future. The cost of carry model is not applicable to these types of underlying assets. Similarly, many a time the underlying may not be sold short. This is the true case of the seasonal commodity. Even though Even though this is simple model does not discount of transaction cost tax, we can always upgrade formula to reflect impact of the factor model margin, not consider computing fair value and synthetic future. That's why the model is suitable for pricing forward contract rather than the future contract. ठीक है? Thus, the generalized statement can be made regarding to the use of cost of carrying model in pricing structure. Assumption of the model and characteristic of underlying asset can help deciding whether the specific asset can price with the help of this model or not. Future suitable adjustment made in model for the specific requirement for the underlying asset. A convenience yielding दे सकते हैं. Let us touch upon more concept future market called conveniencing yielding. We need to go back and have booked at a formula for the fair price future contract. Price future contract spot price plus cost of carry minus inflow. As seen early inflow may be in the term of dividend in case of equity, interest in the case of debt. However, sometimes inflow may also be intangible. Intangible inflow essential means value perceived by the market participants by the holding of asset. This value may be in the form of convenience, perseverance, mental comfort by the holding at the asset. For instance, in case of the natural disaster like flood in a particular region, people start storing essential commodity like the grains, vegetables, energy product, heat while it is as a human tendency we store more than what is required for our real consumption. During the crisis, if every person behaves in similar way, then suddenly a demand is created for an underlying asset in the cash market. This indirectly increase price of underlying asset. In such situation, people drive convenience just by the holding asset. This is termed as convenience yield and convenience return. Convenience yielding for a commodity like different for different people depending on the way they use its perceived future. It may vary over the period. In fact, convenience is a subject issue and very difficult to price. Convenience yielding sometimes may dominate cost of carry, which leads to future too, because no one lends traders the asset to sell short in the cash market. In such situation, practically the cash and carry model breakdown cannot be applied for the pricing underlying asset. Note: the convenience yield mainly arise when there is a scarcity of a commodity, for example crop failure due to natural calamity and inventory low. Hence, convenience yield is usually observed in the case of consumption like the asset commodity, not case of financial assets such as equity, bonds and currency. Expectation model for the futuring price. Expectation model for futuring price. According to the expectation hypothesis, it is not relationship between the spot and future price, but that the expected for spot future price which move the market, especially case when the asset cannot sold short or cannot store. It also argues that future price is nothing but the expected spot price and asset in the future. This is why market participants would enter future contract and their pricing future based upon their estimate for the future spot price and the underlying asset. According to this model, future can trade at a premium or discount a spot per underlying asset. Future price gives market participants an indication of the expected direction movement of the spot price in the future. For instance, if the future price is higher than the spot price and underlying asset, market participants may expect the spot price rise in the near future. This is expected rising market called Contango market. Similarly, if the future price is lower than the spot price, and asset market participants may expect to a spot price fall in future. This expectedly falling market is called backwardation market. आ जाते हैं गाइस प्राइस डिस्कवरी एंड कन्वर्जेंस कैश फ्यूचर प्राइसिंग एक्सपायरी. तो इसमें जैसे इट इज इम्पोर्टेंट टू अंडरस्टैंड एक्सपेक्टेशन हाइपोथेसिस. फॉर इंस्टेंस वी हैव सेड दैट मई 2024 इंडेक्स फ्यूचर कॉन्ट्रैक्ट इतना था 14 मई को. देख सकते हैं 2024 बाहर डिजिट मीन्स अकॉर्डिंग टू द expected amount of future price. It means that on 14 May, market expected a spot index 22,308 at the closure of market on the Thursday, May 2024. On the last trading day of the contract, 30 May 2024, the point is every participant in the market trying to predict a spot index level at a single point time at the closure of market on the last trading day of the contract, which is Thursday on our example. This result is price discovering of a spot index at a specific point in time. Thus, future price are essential expected spot price for the underlying asset at the maturity of the future contract. Accordingly, both future and spot price conversion at the maturity future contract at the point in time there cannot be any difference between these two prices This is the reason why all future contract on the expiry settle at the underlying cash market. This principle remains the same for all underlying assets. Use of future role of different participants in different derivative market. The participants in the derivative market can categorize as a hedger, a speculator, and an arbitrator. Hedgers, corporation, investing institution, bank, government, all are use derivative product to hedge or reduce their exposure to market variables such as interest rate, share value, bond price, currency exchange, and commodity price. This classical example in pharma who sell future contract to lock into price delivery of crop on the future date. Buyer may be food processing company which wishes to fix price for taking delivery crop in future. Another example could be that of an investor with diversified equity portfolio who want to protect his portfolio from any temporary correction in the stock market such as the investor could sell index future in this purpose. ये हेजर हो गया गाइस स्पेकुलेटर ट्रेडर future contracts are very well suited to trading on the price financial asset and commodity. It much less expensive create speculative position using future than by actually trading underlying asset. As a result, potential return are much greater. A classical application is a trader who believes that the announcement of better than expected quarterly result company will boost the stock price of the company. He has two options. The first alternative to buy hold equity share of the company, whereas the other alternative to go long future contract of the stock. If the trader choose second option, go long future contract on the underlying stocks and stock price increase, the value of contract will also rise and he can acquire a position to book profit. Of course, if the trader take long position and the stock price fall, then the future price will also fall. Leave the trader with large loss. Leverage acts as a double-edged sword. Therefore, the position in future contract, which is the basically leverage instrument, are riskier in nature than buying the selling underlying asset. अब आ जाते हैं गाइस arbitrageurs. An arbitrager is a dealer product produce risk-free profit by exploiting mispricing in the market. Simple arbitrage occurs when the trader purchases assets cheaply in one location exchange and simultaneously arrange to sell another location exchange at a higher price. Such an opportunity are unlikely to persist for very long since arbitrager would rush to buy asset in the cheaper market and simultaneously sell in the expensive market. That is called pricing gap. As I mentioned above, there are three major players in derivative market: hedgers, traders, and arbitrators. Hedger aim to hedge like risk, and trader take to risk, which is the hedger plan to afford from their exposure, and arbitrator is established to efficiently between the different market. Trader take neck position in the future market. They go long or short in various future contracts available in the market. Indeed, capacity to derivative market to absorb buying and selling hedgers indirectly depending upon availability of trader who act as counterpart hedgers. Thus, trader from one of the most important participants of derivative market, providing depth to market hedgers may not be able to hedge if trader were not present in the system. Therefore, the presence of the both hedgers and trader is essential for the growth of the future market. तो गाइस देख सकते हैं फ्यूचर मार्केट के लिए ट्रेडर एंड हेजर है जो बहुत इसेंशियल होता है. फॉर द इंस्टेंस एज्यूम farmer expected to price wheat up to fall in near future. He wants to hedge his risk wheat product for the next 3 months till the time he has actually product in hand. So would like to lock in the forward future price now. Accordingly, farmer can sell future contract on the expected quantity of products. In the other sell future contract, he needs to buyer. This buyer may someone who needs wheat after 3 months, may be flour mill, bakery. However, the most of the times there is demand supply mismatch. The market and trader fill the gap between the demand and supply. Here the trader who is a counterpart to the farmer has a country view. This buyer will buy only if he thinks that the actual price of the wheat 3 months down the line is going to the higher than the 3 month future price today. Future further the profit of the trader would depend upon the actual wheat price being more than the contracted future price at the maturity of the future contract. If that happens, the trader will make money, else would we lose money. In additional hedgers and traders to establish link between the various markets like the spot and derivative, we need to third party called arbitrators. These arbitrators continuously hunt and profit opportunity across the market and product and seize those by executing trader in different market product simultaneously. Importantly, arbitrators generally lock in their profit unlike traders who trade neck contract. For example, end of the day market pricing underlying इसे 100 है, मार्केट फ्यूचर 110 है एंड लॉट साइज 50 का है। तो देख सकते हैं गाइस 10 का अंतर है, अब 50 से गुना करें तो सीधे 500 हो जाए। हेंस द arbitrage buy करके मैं 100 एंड सेल द फ्यूचर मार्केट 110। तो लॉकिंग 10 रुपये प्रॉफिट है इच शेयर में। तो आप देख सकते हैं इन द अंडरलाइंग एसेट 108, तो आपको 8 रुपया के यहाँ पर फायदा हो रहा है कैश मार्केट में, वहीं फ्यूचर में सेल रहा था 2 रुपया का हो रहा है। ठीक, तो टोटल 10 रुपया है, तो पर यूनिट का आपको 500 रुपया टोटल हो गया। ठीक, सपोज प्राइस ऑफ द अंडरलाइंग इज 95 एंड एक्सपायरिंग डेट, तो देख सकते हैं 5 रुपया का लॉस है, तो यहाँ पर आपको 15 रुपया का फायदा भी हो रहा है। तो टोटल प्रॉफिट वुड भी 50 minus 5 10 रुपये पर यूनिट एंड 10 into 50 to 500 for the lot. Transaction cost and impact cost have not considered in this example. तो देख सकते हैं इन द रियल लाइफ क्वेश्चन, तो ये कुछ रहेगा ही। अब हम इसमें तो बाकी सब जो भी है देख सकते हैं। अब आ जाते हैं यूज ऑफ इंडेक्स फ्यूचर। इक्विटी डेरिवेटिव इंस्ट्रूमेंट फैसिलिटेट ट्रेडिंग एंड कंपोनेंट प्राइसिंग रिस्क which is the inherent investment security pricing risk, price movement of this asset by the market participant unfavorable direction. This risk broadly divided into two parts: specific risk and systematic risk, and market risk, systematic risk. Unsystematic risk देख सकते हैं जो specific risk को unsystematic risk is the component pricing risk that unique specific event pertaining to the company and industry. Example of a specific risk include the risk of fall in a stock price due to the strike factory worker which affect the product and sales, risk of the sudden departure, the key marginal personal risk of loss of market share due to emergence and a storage competitor. A specific risk is dispensable from the investing security. This risk could be reduced certain extent by diversifying portfolio. Systematic risk: an investor can diversify his portfolio and eliminate a major part price risk that are diversifiable. Unsystematic risk: what is the left non-diversifiable portion of the market risk known as systematic risk. Variability in the security total return that are directly associated with the overall movement in the general market economy called systematic risk. Example: market risk or systematic risk include risk due to sudden changes in the monetary or fiscal policy, description of domestic exchange, and declare of bar. Thus, the every portfolio is exposed to the market risk. This risk is separable from the investment and tradable in the market with the help of index-based derivative. Therefore, the total risk stock investment, sum of systematic risk, market risk, unsystematic risk, and risk specific to the stock. We can use single stock feature to manage risk of equity investment in the spot market. For instance, use of single stock hedge the market participant against the total risk in the equity investment because the future are comparable with the underlying position. Main difference between the underlying position and single stock price is on the settlement from. In case of cash transaction, settlement take place immediately. In case of future contracts, settlement is deferred. तो ठीक है गाइस, देख सकते हैं बाकी जो भी है आप इधर थ्योरेटिकली ज़्यादा है तो इसे आप देख सकते हैं। ठीक है गाइस, और ज़्यादा कुछ तो नहीं है। बीट वैल्यू ऑफ पोर्टफोलियो, बीटा पोर्टफोलियो ये सब है, तो आप इसको उतना फ़ायदा नहीं होगा। इम्पोर्टेंट टर्म हेजिंग देख सकते हैं, लॉन्ग हेज जो कि बायर करते हैं, वहीं शॉर्ट हेज जिसमें देख सकते हैं जिसमें कि हम सेल करते हैं फ्यूचर में। तो यही है, बाकी सब क्रॉस हेज हो गया जो कि बाय एंड सेल दोनों करते हैं। हेज कॉन्ट्रैक्ट मंथ, ट्रेडिंग मार्केट, फ्यूचर मार्केट, तो यही है गाइस। बाकी अब हम देखते हैं, ये सब तो थ्योरेटिकल ही है, बाकी आप खुद से ही पढ़ सकते हैं इसमें। आर्बिट्रेज कंपनी अपॉर्चुनिटी मार्केट, तो पहले देख सकते हैं एफ इजिकल टू फ्यूचर फॉर्मूला है ए सी पावर आर टी, एफ इजिकल टू एस टू 1 प्लस आर पावर टी। तो ये तो हम लोगों ने पहले ही पढ़ लिखा। इंटर मार्केट आर्बिट्रेज, अब आ जाते हैं लास्ट में, हम देख सकते हैं ये कुछ सिंपल है क्वेश्चन का, जैसे कि देखते हैं यूज शुरू एक्सपायर स्टॉक फ्यूचर कॉन्ट्रैक्ट 1278 एंड लॉस साइड 1200, व्हाट इज द प्रॉफिट एंड लॉस इफ द परचेज कॉन्ट्रैक्ट 265। तो देख सकते हैं गाइस, फ्यूचर में किया 270 पर, लॉस साइड 1200 का, कॉन्ट्रैक्ट 1265 है। तो देख सकते हैं कितना रुपया का लॉस हुआ, 815 बस, तो 7 का लॉस है इधर, ठीक। तो देख सकते हैं इफ द फ्यूचर कॉन्ट्रैक्ट बैक 265, तब नहीं, यहाँ पर हो गया आपको 13 रुपया का है, तो 13 रुपया आगे चला गया फ्यूचर कॉन्ट्रैक्ट, तो 13 रुपया का प्रॉफिट है, 13 से गुना कर दीजिए, 15,600 का प्रॉफिट है। इसी जगह आप देख सकते हैं ये क्वेश्चन है, तो आप क्वेश्चन 7 आंसर इसमें दिया गया है, आप भी इसको सोल्व कर सकते हैं। तो थैंक यू गाइस। इसी तरह इसमें 5 क्वेश्चन इधर भी है। तो थैंक यू गाइस, लेटर वीडियो इन्फॉर्मेशन के लिए चैनल को सब्सक्राइब करें, और आपको चैप्टर बाय चैप्टर इसी तरह आगे के लेक्चर में मिलते रहेगा। थैंक यू।